Good evening, guys. Welcome back. It is April 12th, 2026. We're going to go over Sunday scans and discuss some thoughts for the week ahead. Welcome back for those of you guys who are returning. And if this is your first time watching video, make sure to subscribe and follow and check out Substack. Check out the Discord. There's a link in here if you want to join. I recommend it. We're a pretty awesome group of active swing traders and helpful educational community. Over the past few weeks, going back, we were looking at that bounce back trade. Market was extremely extended on all metrics, and what we really have been emphasizing throughout this correction was watching the individual stocks. Not just this time, but like always. The relative strength leaders are much more important than the indexes, essentially at all times. There's always that brief window where correlation goes 1-to-1, and we kind of saw that, briefly over about 3 to 4 days to where everything was moving in unison. But for the most part, you'll get all the information you need from the strongest stocks. Don't ever be eager to short. Especially re-shorting the massive strength that we've had over the past 8 sessions. After 1, 2, 3 days, there are a lot of people just short the pops. Every time it happens, every time someone is too eager to short at the beginning of a correction, in the middle of it, and at the end of it. So just don't let it be you, especially after a large decline. Usually during a market correction, I get 1 to 2 nice short side trades. And then, my focus all wants to be on getting exposure coming out of a correction. It's never easy, right? There's always a narrative. There's always some concern. And it's always hard to figure out which stocks are just like defensive and which stocks are showing true relative strength and, potentially ready to lead the next leg higher. And to be quite frank, I think this was a little bit of a harsh example for some people. I think the overall feeling that people had last week was that they don't have enough position, they don't have enough exposure, and they don't know what stocks broadly, like on Twitter, and I think just generally traders in general had a tougher time falling victim of the chop over the past 6 months. Got too excited on the short side over the past 2 months and weren't ready or willing to pull the trigger on the upside into some of the names that stayed out, right? Your TERs, your GEV, CLS, SNDK, MU, whatever it is. Bloom Energy, Dell, Marvell, right? And that's a problem. I hope it's a hard lesson. I hope it's a painful lesson. And you're going to have to learn it again. Every single time there's something you learn during a market correction. And it never gets easy, right? It's never easy to navigate these periods of time in these turns. In this 2 to 3 week window before a turn, after a turn, and kind of in that first consolidation or first flag afterwards. The best advice that I can give people is, again, these 3 things: watch individual stocks, don't be eager to short, and kind of plan for exposure, and really be willing and ready to play the game of trading, right? To flip the coin, if you will, to identify that stop and risk reward. Anyways, I go over some of this stuff here. Excited about earnings season kicking off. We've got the banks early in the week. Then we've got ASML and some of the semis, TSM and Netflix. And then not this coming week, but the next week, we've got a bunch of the mega caps, your Apples, your Amazon, Tesla, all that stuff. Not much in terms of the news front. We got PPI on Tuesday. That's about it. And then market breadth data. I had a really good post on Twitter about how you can identify some of these turns in the market. This on Pradeep's 4% breakouts versus 4% breakdowns. 331, the day the market gapped up off the lows at Tuesday. This was the highest 4% breakout day of the entire year. And this was the lowest 4% breakdown day for the entire year. These turns are often marked by this. And then we get the days that followed, the lower wicks, the gap down red to greens, to give us further area to risk offs that just kind of showed that it was believable in the near term. Here's the uncharted territory breadth monitor. A little bit of a tighter universe. I've got about 2,800 stocks in here. These are percentage of stocks above the 5-day moving average, 10-day moving average, 20 EMA, 40-day moving average, 50 SMA, 100-day, and 200-day. So you can see, right before that 331 day, we were at very, very deep red on all of these percentage of stocks below the MAs, right? And then, quickly we're pushing up and showing this sort of strength. Very, very impressive. Yeah. And here's the same thing of now this is percentage of stocks above MAs just kind of plotted out on a chart here, showing the notable extremes on each end, 20, 15, 10, and 5, and then 70, 80, and 90 on the upside. Brocco's market health tracker, you can see how red this got. And if you go back and look through history of his, once you start seeing this red, it is this much significant red all throughout this usually means we're pretty close to a turn. Theme tracker from Deep View. Bitcoin miners actually led on the week. Semiconductors in second place. Telecom and satellite services for the top three. For the last month, semiconductors are in first place. Bitcoin miners, telecom, and then you've got banks up here. This is awesome to see, guys. Semis, banks, telecom, and then these Bitcoin miners, right? Which you can just kind of call it AI, if you will. Over the top month, over the past 1 month, incredible to see that strength. Percentage of stocks above the 5-day moving average, we're not stretched. We're sitting at 58%. We're coming down into the end of the week. We're up over 80% on Wednesday and Thursday, back down to 50 here. I think pretty quickly if we get 1 to 2 days of pullback, maybe just overnight Sunday. I think this can get bought up. And likely will get bought up pretty quickly. T2108% of stocks above 40-day, not overbought. A pretty big thrust from sub 20 all the way up to 45. I'm sure you felt it in the market. Percent of stocks above 200-day moving average, sitting at 46. Again, right in the middle. Here's that seasonality effect starting to come into play. Weakness early into the year, and then you get this Q2 strength. We'll see how much this kind of continues throughout the week. Go over a number of indexes. Don't need to go over these right now, but go ahead and take a look at SPY or the QQQ and kind of the commentary on there. This part I do want to highlight. Now we likely get our first true stress test to see where buyers want to support this market. 50 SMA is still curling down, so maybe some slight checkbacks in the market are going to come. 200 SMA will be important, 20 MA will be important, and we've got a number of support levels down below here to where the market kind of gapped down and buyers stepped in. So I look forward to what the market has to offer in the coming days. SPY Weekly just looks like a failed breakdown. IWM continues to hold that 245 level in a very, very impressive way. I think it's the only thing that I've talked about on IWM. It's the only level that is important. We've only gotten, I think, 3 closes below that level going back to December, which this is the 2021 and 2024 high. And very impressive, especially on this Thursday that we gapped down and went red to green that day on IWM. SMH, I shorted this move from 400 down to about 3 into the 360s. Covered quickly on this gap up day, and since I wish I would have flipped long, because holy crap, what a thrust on this! It's just incredible. Short term extended, going to build out, test MAs, test a bull gap support. Want us to? I'd prefer us to hold these previous all time highs and build out over that, but we'll see. We can just continue to observe semis Very, very important. USO, curious as to how this builds out here. If looking at this, it looks like a baby pop that's going to roll back lower and kind of lose this trend and kind of channel, if you will, and it's shortable. Not really my cup of tea, personally. Gold. Below declining 50 SMA, I actually am a little concerned about gold. I do think that this is potentially shortable. I'm not interested in shorting it, but if you pull up the weekly here, actually I didn't post it, but I do want to pull up the weekly quick. This looks like kind of like a little bit of a blow off, and then a lower high into a wedge drop right here, and then 3 weeks up into a lower high that I think might try to work its way down. Wouldn't be surprised to see that. If GLD does end up failing, you can probably trade GLD or SLV on the short side. Again, not something that I'm interested in, just kind of something that I'm observing to see what market participants are at, or this HYMC I think is also a viable short candidate. Mags into the declining 50 SMA here, still below the 200-day. It was nice to see things like Amazon and Nvidia and Google kind of get some kick in the ass. This has, if we start to get those to participate heavily, it's going to be pretty awesome. XBI biotech ETF. I think this looks fantastic. This is what it did during the market correction. As a QQQ, we're living below the 200-day moving average. This just went sideways, tried to break down below this base, and immediately got snapped up. Now we're tightening on the right side here below 130. I think if this gap down and goes red to green, I think we get a buyable spot off the 9, the 20, and the 50 right here that I would be very, very interested in. I know it's biotechs. But you are what you eat. UFO space ETF, very good. Again, look at that relative strength to the market while we're correcting below 200-day moving average, and look at the fast move that it's made since. Pretty awesome. Again, I think a gap down pretty quickly gets bought up. Very interested in the space sector, which we'll go into. IGV software still sucks. No reason to watch it. Bitcoin, kind of still sucks. Not really interested in it. Bracco goes over his stuff. Actually, I haven't had the chance to read what he wrote, so I encourage folks to dive through what he said here. I should have read this before I started the video, so I apologize. He talks about the first flag coming out of the April correction. Yeah, he was mentioning that a lot. First stress test, this can be a vicious pullback. Yep. Bracco, good stuff as always, man. Later in the cycle, and when it matures, dude, this is why Bracco's the GOAT. Okay, well, I'm gonna go back and read this much more intently and focused a little bit later. I just want to go through some of my stuff. Just took some screenshots of some of the messages that I sent as the market was correcting. VIX looked like backside. Again, AEHR missed trade on that. I don't need to go through this. Let's get into some of the ideas. Here's some positions and kind of some thoughts and commentary. Okay, here's the stocks that I'm watching. The one that I left off this, actually, I'm just gonna get off of Sunday scans, and I'm gonna go into I don't have deep view open. I'll just go into TC2000 quick. I'm just going to go into here and go through some of the stocks that I'm watching. Okay, so a lot of things are pretty extended. A lot of the leaders, SNDK, Intel, MRVL, GLW, AAOI, right? A lot of these are pretty long in the tooth. This AAOI, this undercut of 85 into the earnings close. Boom. And then you get a gap down red to green. Just goes 100% from there. Pretty incredible. Yeah, but overall, some of the main leaders are pretty extended and are going to need some chop around and some pullback. Some of these might just get reset in a day. So, like, my favorite things that I'm watching, CLS, if we get, oh god, I'm still so mad that I didn't buy this on Wednesday. If we get 1 to 2 days of pullback, I think this gets bought up like very, very quickly. Maybe just one, depending on how much we gap down on Sunday night futures. I have no idea. This might just get one gap down, go red to green, get like an inside day, and just end up looking like this. This is probably going to be one of the top things that I'm looking at. GLW, same thing. This might just need like one little check back here, and then get going again. And you might just get a gap down red to green within the first like 30 minutes on Monday. Maybe that doesn't happen. Maybe we try to go red to green and come down lower. Who knows? But it reminds me of some of these spots, which I'm glad Brocco mentioned that in his section. Reminds me of like some of these areas to where there were headlines about tariffs and all this and that and China and whatever, and all we did was gap down. First one, go red to green. So if we're at some of these spots on GEV and Hood and all that, it's going to be some fun times. And I'm really looking for some of those. Q is another one that I'm watching here. This IPO, held this range really nicely, built out this base, just pulled into the 50-day while the QQQ is below the 200-day moving average. A couple days sideways, maybe just one gap down. This could get going. SOLS I actually didn't post about, which I'm mad that I didn't. Wish I was long this. It's been choppy, so like I'm okay with it. But if this gap down gets bought up, I think this can push $100. Weekly might still be a little bit extended. Like I could see this needing a couple weeks or so here. But maybe this is just like a cup without handle. This is an IPO stock that made a huge move, and now we're going side. This looks fantastic. This looks really good on the weekly time frame here. So I think this is deserved of a focus, and I should have posted it in my section on Sunday Scan. I actually don't know why I didn't, because I'm super interested in this. Went over GLW, went over SOLS. And then I've got a couple of these spec stocks I'm looking at. So I always kind of split my list into 3 different categories. You've got your leaders, you've got your emerging setups and stocks of interest, and then you've got your PRs and news gappers. So those 3, leaders, relative strength, emerging relative strength and emerging setups, and then ERs and PRs. And right now a lot of the leaders are extended. Right, they're a little bit long in the tooth, and a lot of the emerging setups are kind of yet to be shown what they're going to do. And now we've got earnings season coming, so we'll have plenty of things to choose from. And kind of here's the list here. I like the way that MU is holding this 50-day moving average. I like this high tight inside day. I think a gap down or even an undercut of 400 into this range could be very, very actionable. TER, kind of same thing. I think pretty quickly, if this checks back, that it's going to get bought up. And another one that really deserves focus. I think you keep it rather simple. I always have a bunch of stuff on my radar, but really it is the stocks that I posted in Sunday Scans. You add Souls to that list. Add maybe add NVIDIA to that list. Pick a space stock or 2, and I think that is the focus. So throw Souls on there, throw NVIDIA on there, throw maybe an AAOI or an SNDK, and then pick a space stock from where I listed. I went into detail into some of the space stocks a little bit here. Pick essentially one to 2 of these to watch here, and that's the list, guys. We've got to focus up, because who knows, we might just get a very brief period Sunday night and Monday for some of these, and maybe it takes all week to chop around. I'm not sure yet. I'd be willing to take a few paper cuts. Nothing too crazy, 0.25% here, 0.5% there. But this seems like the time to try to embrace the gap down and to try to really sneak your way into some of these leaders. And we'll see if we get a gap down. I'm actually surprised that the market's even going to gap down on Sunday. I know things are extended, whatever. But I with the Iran comments, I didn't expect the market to want a resolution like over the weekend, and I think some of the commentary and conversation has been pretty normal and expected, kind of the back and forth. So, anyways, um, ALM, I didn't list ALM. I am watching this. I decided to list AMPX instead. Actually, I got it drawn out a little bit differently. I decided to list AMPX instead. I am watching ALM here. Maybe if this pulls like a little inverted head and shoulders with the left shoulder here, head here, and a gap down red to green. This is something that I'll be watching as well. This is a tungsten stock. We've been focused on this for past couple months here. But some of these emerging setup semiconductors like LSCC, there's COHU, which is another one, UCTT, which has been really, really strong. ICHR. I think some of the, like, this is what I mean by some of the emerging ones, right? It's not an SNDK. It's not a COHR. But, it is, kind of emerging out, right? It is emerging. It's becoming a notable stock right now. It's made a 200% move, pulled back into the 50-day, built out a little bit of range, starting to poke out here. CoreWeave I thought was really notable. This was its highest volume ever. And we all know the move that it made here. I'm curious as to what's going on. I think it's just probably spillover from NBIS, which, by the way, this looks absolutely amazing. It made a 60% move, and it bottomed in February, and then just a bunch of higher lows since. Again, while the QQQ is doing this is what NBIS is doing. Like, this period, I've never seen such remarkable relative strength in certain names, and then the blast off move once the market finds its footing a little bit. I thought April of last year was remarkable in that aspect, but this one has been, I think, significantly more remarkable. Like, significantly more remarkable. It's amazing. Intel. So we've got some things to choose from, and I hope you guys enjoy Sunday Scans, and I hope you're excited for this week, and I hope you come ready to go, willing to take some losses, willing to take some stabs, and we'll see if the market punches us in the face or not. Let's go. Let's have a great week, guys.